Hey guys, Ed here from Revolution Swing. It's no secret every trader out there wants to get the best entry possible when jumping into a swing trade. But did you know when entering a position, the slightest oversight on your part with this one minor detail can make all the difference in the world with the amount of profits you can make and potentially turn what could have been a winning trade into a red trade? And in this video, I'm going to show you how monitoring your spreads for you option traders out there can make a huge difference in the world. So without further ado, let's get into the chart.
All right, guys, so let's get into the chart here. So, up for grabs here, for an example, I have dominoes. And this is a good representation because this one can have some really, really wide spreads. Disclaimer, these levels here I marked up just for example on this lesson. None of these mean anything. I don't want anybody jumping in on any of this stuff. This isn't something I'm looking at. This isn't a play. Nothing. These levels mean nothing. So do not take this, okay? All right. So with that being said, I like dominoes because now I use TC 2000. So what I like about TC 2000 is you could see here, right? This is your spread. Now this is after hours, so it's relaxed quite a bit. So it's not the greatest representation, but dominoes can have some pretty wide spreads. If I look at the option chain now, let's say I took the 392.50s, it's $1.10 in spread, right? If I were to enter right now, that means you were behind the eight ball, you were underwater $110 for one contract. That's a lot of money, especially for somebody that maybe has a small account. You know, a lot of new traders don't have large amounts of cash to start an account with, right? So, lesson for you new traders that maybe only have, $1,500, $2,000, $3,000 accounts, you don't want to be trading something like this, especially, with the spreads like that, because $110 is quite a bit of money for a small account. There's a method with options, guys, right? There's a precise way to enter a position, whether it's a day trade or a swing trade, right? Swing trade, you want to try to be as precise as you can, but you don't have to be as precise. It sounds a little contradictory, but with swing trades, it's always obviously about the bigger picture, right? So you don't need to split hairs over pennies, kind of like a day trade. But you do need to watch your spreads, right? Spreads can make all the difference in the world, right? So I'm going to give you a good example. So let's say I was looking to take dominoes right now. And again, these are just arbitrary levels, guys. And I entered, right? And this is where a lot of new traders, especially somebody that's been trading for a while, but they're dabbling into options, and options is new to them. But this is where a lot of new traders on the option side can get hurt and you can get damaged big time. And it's kind of a psychological factor, right? So let's say I was looking to get in here or here. And it doesn't matter, but somewhere in here I got in and the spread was, like I said, it was $1.10. And I didn't enter the way I should have. I didn't wait to get the proper entry and wait for those spreads to tighten up, right? Because that's the key to it. You want those spreads to really tighten up and wait for that volatile moment and that precise moment to get in. And I got a bad fill. Not so much a bad fill on the equity side. Let's say I took it at the level, but the spreads, were loosey-goosey and they didn't tighten up, but a bad fill on the option side. Now, on a swing, you generally want to have a target, right? Now, let's say this is my first target, and it comes all the way up here. And I'm looking, and I'm going to sell. I'm like, yeah, man, this thing's working in my favor. And I go to sell, and I'm still red. And I'm like, how the fuck is that possible? Like, I'm still red. Well, it's obviously because you got a bad fill, and you were way behind the eight ball the minute you started. Now, this is where a lot of new traders can get in trouble. And it's kind of, it plays into a handful of things that a lot of new traders struggle with. One of which is accepting the fact that you're going to take a loss, right? A lot of new traders struggle with taking a loss. Losing money, like, just raises hair on the back of your neck. And it does for a lot of people. I mean, it doesn't matter how long you're doing this, is at some point, you kind of squirm here and there, with taking a loss, right? But it's natural. It's part of the game, guys. But as a new trader, you're really going to struggle with that. And you're like, how the hell am I red? How am I not making money? And this trade is going in my favor. It's working, right? That's a tough pill to swallow. So this is what a lot of new traders and beginning traders might do. And I've seen it before. So I shouldn't say they might do, but the likelihood of it happening at least once to you is probably highly probable. You're going to disregard your first target. You're going to violate the cardinal rule of swinging when it comes to paying yourself and disregard your first target, which is your absolute most important target, which I've talked about in a previous video. And you're going to turn around and be like, you know what? This thing is working. I can't accept the fact that I'm losing money in a winning trade. That just doesn't make sense. So I'm not going to pay myself here because this thing's going to keep working, right? And I'm going to wait for here. And guess what, guys? I mean, it's a extreme example because we're getting close to the election, but let's say for whatever reason, somebody tweets something, or somebody gives a press conference, or somebody says something and it decides to pull back. The market decides to pull back. The stock decides to pull back. Now, you went from a trade that you got the first target, and yes, you were losing money, but because you got it up to here, you should have paid yourself and just closed out, because at that point, you minimized your loss, right? Now it's pulling back, and you're really getting behind the eight ball. And some of you out there may hold on to it and be like, you know what, it's a swing, I'm going to hold on to it, and I'm going to wait for it to come back up. And let's say it doesn't, right? You just lost a shit ton of money. Why? Because you didn't watch your spreads, weren't educated on spreads, and because of that, you started a domino effect, no pun intended, on breaking rules you shouldn't be breaking, and kind of getting very unraveled and undisciplined, and at the end of the day, it was still a good trade. You just didn't watch one little thing, and you should have just taken a small loss, and now you're really underwater. So spreads are huge, guys, especially if you're trading options, you're swinging options. You really, 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 really got to make sure you watch your spreads. And you got to, I'm not going to be honest, I use spreads, and I look at spreads to determine whether it's something I plan on trading or not, and I plan on swinging. It would have to be a killer trade for me to want to swing something that has really, really wide spreads, because there's, like I said, there's work involved. And sometimes, if the right amount of volatility isn't there, those spreads don't tighten up enough for me to really want to get in. And there's times that you could be watching a play and really stalking it, and you have to accept the fact that it just didn't give you the right opportunity. Let's say these were my key levels, but the spreads didn't really tighten up to the fact that I wasn't comfortable, even though it was at bounce points, areas that I know it's going to go. I'm probably not going to take it, and that's just part of trading, guys. You got to, you just got to accept little things like that. So at the end of the day, guys, just really, really pay close attention to your spreads. Wait for those moments, wait for those things to tighten up, and you'll be good to go.
So I hope you guys enjoyed the lesson and learned something. Remember, taking that little extra time to watch your spreads and wait for that proper moment can make all the difference in the world. And remember, if you want to get properly educated on how to trade stocks by a true professional, head to Tricktrades.com. And if you want to grow your account with killer swing trades, head to RevolutionSwing.com. So until next week, this is Ed signing off.